Hi, I'm Christine Benz from Morningstar.com. You have until April 15th to fund an IRA for the 2009 tax year. So all this week we'll be talking to some of Morningstar's experts to get their best ideas for funding an IRA. I'm here today with Josh Peters. Josh is editor of Morningstar Dividend Investor, and he's Morningstar's resident dividend guru guy. So Josh, thanks for being here.
Happy to be here. Somebody has to be the dividend guru guy, right?
So Josh, you've got an income-centric pick as usual. What's your best idea and why do you like it?
Well, I don't have a whole lot of good ideas to pick from right now, but markets have come up a lot, and dividend yields are hard to find. But by poking my head outside of the U.S., I have one company that I like quite a bit. It's called National Grid. Ticker symbol's NGG. They are kind of an interesting mix of utilities. They operate all regulated utilities, just transmission and distribution, no generation or energy exploration or anything like that. But it's got a roughly 50-50 split between utilities in the northeastern United States and in the UK, where they operate the national electricity grid.
So what do you think are the attractions of this business? Because I know that's a key thing you think about when looking to build positions for the long haul.
Well, you think about investing for an IRA, you're looking down the road a ways. So, my general emphasis would be to look for stories that can give you a lot of income and a lot of total return, that in turn you can use that income to compound, produce something that looks a lot like growth without necessarily having to be growth of the underlying business. Because valuations are relatively high still in a historic context. Dividend yields are very low. Interest rates are very low, but that would seem to leave only one direction for them to go.
Right.
And if we are in this new normal environment of low economic growth, then stocks that are priced to need a lot of growth are going to disappoint. A company like National Grid, the yield close to 6%, if its dividend can even just grow at the rate of inflation, it's going to be a rewarding investment. In fact, we think National Grid could be raising its dividend by 5, 6, maybe even 8% a year for many years to come. Their regulatory framework that they're regulated under is just so favorable, really, on both sides of the Atlantic.
So what are the key risks at this juncture that you see?
Well, it's funny, I just mentioned interest rates a little bit ago, because interest rates do tend to, rising interest rates do tend to be negative for utility stocks. However, I don't think utility stocks in general are priced for 0% short-term rates today. I think that there's some room for rates to move up and normalize before utility stocks would really start to lose their attractiveness. And also looking out, over a long period of time. I mean, the income you're going to collect from this over a 5, 10, 20-year period is really just going to be so large in relation to current share price that even if it dips for a little while, who's really going to care after that many years pass by? The real specific risk to National Grid relative to, say, utilities that are only in the United States is what happens to the British economy, which has got a very high budget deficit right now, high unemployment, a very weak recovery underway, perhaps one of the weakest in the industrialized world. The way I think about it is this, like a utility in the United States, this utility in Britain, is really insulated from most of what goes on in the economy. The big risk is currency. What if the pound continues to drop or the country tries to devalue to lessen the burden of some of its external debts? But if that happens, inflation probably goes up in the UK. Mm-hmm. If that happens, then in turn, utility rates are actually tied to inflation in the UK. So you get an automatic pass-through to revenues and to earnings that can really act as a good long-term natural hedge from the standpoint of a U.S. investor. It's not a perfect hedge, but a very good one if you have the opportunity to give it time to work.
So you think the margin of safety is there, and that's what you seek ultimately with every investment that you recommend?
Yeah, I'm looking for low-risk investments in general, but I also want to think about what could go wrong, even in what looks like a low-risk situation. And paying less and getting a bigger yield up front is one way to help insulate yourself from those risks.
Okay, Josh, thanks for the great idea.
Very happy to be with you here today.
Thanks for watching. I'm Christine Benz from Morningstar.com.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.